Welcome guys, welcome. I hope you can hear me nicely, loud and clear. Can you hear me nicely? Please just let me know if you can hear me so that we can start. Can you hear me nicely? It's been a while. I hope you've been doing well. I hope you've been making money, guys. Okay, hello bro. Imanj, can you hear me? Oh, that's nice, you can hear me. Okay, it's fine, we can now start. So we're gonna start with what? Okay, so let's quickly start and see what we can find here. So today's live is gonna be very short, very short. So what I want to do is this. I want to do a quick a weekly focus on some assets and some assets. We'll look at boom and crash, volatility, step index, jump indices. Basically we'll be looking at those indices. So what we can see is that we're gonna start with step index. So if I go to the monthly time frame, what I can see, this is the current month, January. The candle is very bearish. The price has been moving down, but what we can also see is that price has been following this channel. And if I go down to the weekly time frame, what I can see is that price has been following this channel, and we can see price respected this lower trend line. You see here it was used as a resistance. Here it was used as it was broken, and then here it's now being used as a support, and then we can see it was also used here as a what, as a support. But so we are anticipating that there's a likelihood that price will likely going to respect this trend line and then start to move upwards. So this is what I'm seeing in crash. If I go to the daily, let's see what is taking place on the daily. If we drop down to the daily, we can see that there was a close below the trend line, which is something that we don't want to see. Price closed below that trend line. So trading step index becomes a little bit tricky. It becomes a little bit tricky because of that. So what we can wait is that we can wait for today's candle and see how that candle is going to open. If it opens inside this lower trend line, and if it is able to close above the previous day's high, this one, we can start to look for bullish setups. So this is what I'm seeing in step index. Although the price is bullish, is bearish, is coming down. If today's candle is able to close above this price, if it's able to close above 81.64, 81.66, 81.66 here, if we'll end up having a what, a bullish engulfing at this lower trend line, which will be a signal that price is likely going to move up. So basically on the daily time frame, this can end up being a fake out. So this is what I'm anticipating in step index. And if we also look here on the 4-hour, we can see we have some bullish candles here. We have this bearish candle, and we also have this. Let me drop down to the 1 hour. I can't see nicely here. Okay, what can we see here? Price came up. Okay, on the 1 hour, I think it's more clear. Here we can see price drop down. Here we had a bearish setup. There was a bearish trend. There was the continuation of a bearish trend, and as we can see, there was a lower low, high, and price created a lower low. So if we are going to analyze from the 30-minute time frame, we can see that this level here was our valid. We don't have a candle that is managed to close above this previous lower high. Man. Okay, so this is what I would want to see. If I'm going to start looking for buying setup, I would want to see a candle closing above this level. So that we can see nicely. I want price to close above this level. This will start to indicate that price is likely going to move upwards. So we need a candle that will close above this price. If a candle closes above that price, we can now start to look for buying opportunities. Here we need a candle to close above here. So there will be so that's one thing that I'm waiting to see in step index. I want price a candle to close above this price on the 1 hour 1846. But overall, I would also want price to take out this level. Overall, I want at the end of the day price to take out this one at 81.66. If price is able to close above this, then we have a bullish setup. Now we can now start to look for buying opportunities. But we should never rule out the fact that this breakout might result in price moving further down. Man, another news. Okay, then if we move on to, we're gonna move on to volatility 75 1S, volatility 75 1S. So what we can see is that if you go on the monthly time frame, price is bearish. Price was moving down. Why? Because we can see a series of lower lows, lower highs. Sorry, I don't know why I moved this way. Series of lower, high, and then price here. It's a little bit tricky now because price was supposed to create another lower, but that didn't happen. That didn't happen. So then price then moved up, failed again to go above this level. So it's a little bit tricky to look at this particular level. But what we can see is this one, we have price respecting this trend line here. We have price respecting this trend line. We can see price came to this point and price moved up, and again it moved up. Then it came to this particular point and then it moved up, and then again this is what we are now seeing. Price came again to this trend line and then there's a big wick. So analyzing these two candles, we can see that this one was a bullish pin bar, a hammer candle, and there is a likelihood that, so it's signifying that price is being rejected on this particular level. And again we can see a big wick again on this particular candle, which is also signifying that there is a likelihood that price is also being pushed upwards. So there is some form of rejection that is being experienced at this particular price. Okay, so if I drop down to the weekly, what do I see? I see that price is consolidating at this particular level and is also respecting this lower trend line. So what I'm anticipating is that on this weekly candle, I'm assuming that price is likely going to move upwards in volatility 75 1S. So if I drop down to the daily, I can see how this is playing out. We can see price came to this, we had this candle. We can't say this is a bullish pin bar. It's a doji candle, but on this doji candle, what do we see? We can see that price, there's a big wick indicating rejection, and it's, if this candle closes like this, it will be a morning star. We have 1 2 3 candles. This 3 candle price action, these 3 candles, these 3 candles. If price closes above this level, this one, we would have a morning star, which is also signifying that price is likely going to move and reach this particular level. So it's a waiting game. We have to wait for this daily candle to close. But if I move down to the 4 hour, do I get something different? We can also see that price on the 4 hour time frame is moving up. We can see very bullish candles, very big bullish candles. So there's a likelihood that price is likely going to continue moving down, and it is likely going to reach this particular level. So this is what I'm assuming. We have this setup in volatility 75 1s. So price is likely going to move upwards. But on the weekly focus, what do we see? Let's just analyze the previous 2 weeks. Price basically is just consolidating. We can see we had a very bullish candle. Price came down, and then price is now basically price is just consolidating in volatility 75. We don't have a clear direction of where price is going. Then let's go to volatility 10. On volatility 10, if I go to the weekly, I can see that price, let me go to the monthly. We have a bullish channel here. We have a bullish channel. A bullish channel. Let's go to the weekly. On the weekly, price is there's a bullish channel. Basically, I can see a bullish channel. We have this highs and this low. The price is moving within this channel. Then if I go down to the weekly, so we'll make use of this channel. Basically, if you're going to be trading volatility 10s, we'll be making use of this channel, and price at this particular level has reached the top of this upper trend line. So there's a likelihood that we're currently going to experience a bearishness in what? Volatility 10 1s. And if you can analyze the candles at this particular level, you can also see that one, we had a very strong bullish momentum here and also here. But let's look at last week's candle. It is less bullish momentum, so there's a likelihood that price is now facing some form of what resistance, and is likely going to reverse and will start to move downwards, and there will be the continuation of this particular channel. So in volatility 10s, we're likely going to experience price moving down on this week, because we can see there's a reduction in the momentum as price is now likely going to move downwards. If you move down to the weekly, daily, what do we see? Okay, I was able to draw a trend line. Let me go to the 4-hour. There's a trend line. There's this trend line here. Okay, we have a trend line, and we can see this trend line is how many touches? 1, 2, 3. There's 3 touches. And what do we see here? We also see the continuation of, so currently you can't just start selling. Why? Because we still have what? The continuation of the bullish momentum. We can see a series of higher highs, higher lows, higher highs, and higher low. So for you to be safe, what you have to do is this. You can go to the one, you can wait for the price to break this trend line. That's one. The safest way to trade this, wait for the price to break that trend line, and then wait also for the price to take out this previous high low. So we want, if you're going to be selling, we want price to take out this break this trend line, come back and close below this previous low. This will now indicate that at this particular level we now have a change of character. So we want a change of character first. Once that happens, we then have to wait for price to return to an institutional reference point. So once this takes place, price is taken out this particular level, we want price to return, probably to retest this trend line at this particular level, and then we now sell, and then we can catch this movement. So this is what I'm anticipating. Price one breaks this trend line and also close below this particular level, and then we don't immediately sell. We wait for a pullback, and then when price makes a retest, we then sell at this particular level. So which point, where exactly can we becomes tricky? So this is what I'm waiting for. If this takes place, then we know that we can now look. So wait for a change of character at this particular level. Then price closes below here, then a return, a pullback to this particular level. Then when this retest here, look for an institutional reference point. It can be an order block, a fair value gap, and then you can sell and move down to this particular level. So this one will be very good if you are able to catch this type of movement. Okay, let me just see what people are saying. We also have this signal. I gave it in the VIP group, and also a group that we have for on our Telegram group where I post signals. We have a group on Telegram. This one, I post signals in this group. So for you to join, what you have to do is this: you have to go and like 3 of our recent videos. Just comment on them, like and comment, and then you'll be editing this group. Okay. Let me read. I can hear you. Great content said. Thank you so much, Rigi Piri. Mr. Piri, are you from Zimbabwe or from Zambia? Nice to meet you. Samuel, good to have you live today. Thank you so much, Mr. Samuel. Yes, I always want to come on a daily basis, but sometimes you get busy. Loud and clear. Thank you so much. What can you say about derivative manipulation? Manipulation is always there, guys. These guys, they are not in the business of us making money. So what can we do if there's manipulation? So recently I discovered that. Let me take you through what we so on Saturday over the weekend, we're gonna be having a mentorship class. This one is for people who are starting to trade, who have been trading, some people who wants to start trading. So I've prepared 2 main topics: risk management and trading psychology. This is the reason why people are losing in trading. It's not because of the strategy. It's not because of the manipulation. You're not losing because of manipulation. You're not losing because you have a bad strategy. People are always constantly looking for strategies, which is wrong. What you have to look, the missing pieces of the puzzle is this: trading psychology, the mindset. So we'll be talking about the mindset of a profitable trader. So basically, we have a course that I've prepared for you guys. It's very, very cheap, very cheap, $20 if you're interested. We'll do it on Saturday. We'll arrange the time. Saturday to be what? Saturday, 3 February. Guys, on the 9th of February, I'll be having my birthday. yes, I'm growing old. So on the 3rd of what? On Saturday, the 3rd of Feb. Not Saturday. Saturday will be the 27th of January. I'm gonna be teaching on these 2 particular topics: trading psychology and risk management. Trade wisely, trade confidently, and safeguard your capital for enduring prosperity. So basically, that's what we'll be talking about. Yes. So when we talk about trading psychology, we want to develop a mindset of a profitable trader. How do you? What are the thoughts that you should entertain when you're what? When you're trading. So basically, when you talk about trading psychology, we're not looking at how you trade. We are looking at how you think when you're trading. So these are some of the things that it's one of the missing pieces, because when you have 3 components, you must have 1, trading psychology, risk management, and also a very profitable strategy. With those 3 components, you're in a position to make money. But what are most traders constantly looking for? They are constantly looking for strategies. They think money in trading lies in strategies. No. You have to know trading psychology. You have to know risk management. And I've also prepared I created where's this thing? I recently created on that topic, on that particular, on Saturday, those who are in my groups, I've shared with them this amazing, I created a tool that we can make use of so that we master risk management, so that you don't blow your account. The reason why you're blowing your account, it is because you're missing this. So this is DC derivative synthetic indices lot size calculator. So basically this lot size calculator will help you so that you don't blow your account. So I'll be teaching you how to make use of this and basically we'll also be looking at risk management. So make sure you attend. It's only $20 US, and then so you can register now. My contact details. Let me just insert my contact details for those that might be interested in joining this amazing program. So it will be on Saturday, 27 January. Saturday. Then I think the best time will be 1900, when most of you guys are free. 1900 CAT. Teaching basically two topics: risk management and trading psychology. So 27 January at 7 o'clock CAT time. Then if you're interested, this is my number, +2. So I'm gonna share my number, +26768322930, or you can use the other number, 27679671192993. So get in touch with me. On Saturday, we'll be having a mentorship where we focus mainly on trading psychology, risk management. These are the two pieces that you guys need to be profitable. I'm telling you, only focusing on strategies, you end up losing. You lose. I'm telling you, I'm 100% sure of this. So you need to know trading psychology and also risk management. So let's just continue on this particular area. So get in touch with me. You can register, and then you can be part of this amazing thing. Okay, let's just continue. We're now talking about this, and I said this is the setup that I'm waiting for in Volatility 10S. Then if we come to jump 10, what can we see? On the weekly, okay, on the weekly, we can also see price is moving within a channel. Price is moving within a channel. So these trend lines, they help you to identify what is taking place in the market and what is likely going to take place in the direction in which the market is moving. Okay, so what we can see is this price is moving with this bearish channel, and then what we can see, price came to this particular level here and then dropped. Okay, if I go on these weekly candles, so these are weekly candles. What we can see is this. If you start from this particular candle on this the first week in January, there was a very big candle here. As a result, price was okay. Then what we can see the next following week, this one, the 14th of February, the second week, we have price closing above this previous candle. So when we are talking about buyers, this is indicating that there's bullishness in this kind of setup. So we are assuming that this week we're likely going to experience bullish momentum in jump 10. Price is likely going to move here. And what we can also see is that if I drop down to the daily chart, I can see there was a trend line, and the trend line was broken, and price was being conformed in English is difficult. Is it confound? Yes, it's confound within these boundaries. We can see here we had what can we say? This is not a flag pattern, it's just a wedge pattern. Price was moving within this boundaries, came down, and now what we can see is that price has managed to was able to break from this from this wedge pattern. It's just a wedge pattern. So what we are anticipating is that we are anticipating that price is likely going to move up, probably reach this particular level here, reach this particular level, and then when that happens, let me just go to the weekly, monthly. Okay, for the month of January, price is very bullish. So there's a possibility that there can be a breakout. So it's just a waiting game. But what I know for sure is this. You can never be sure in trading. But what I know is that price is likely going to reach this particular level. When price reaches this level, let me go here. We're anticipating that there's going to be a breakout here, and then price will move up. So at this level here, this high of this level, okay, price can also move further up. Okay, let me go to the 4-hour and see if we can get. So if you're going to be trading this breakout here, this is going to be your target somewhere here around this area here. So here is just a waiting game, but there's a great likelihood that price is likely going to break from this. Why am I saying this? I can see there's a break on this trend line. There's a breakout on this trend line. That's one. There's a breakout here. And then what we can see is that price is also, there's bullish momentum. Price is likely going to reach here and probably break out and move upwards. There's that likelihood. But what I know is this. Maybe for the next 2 or 3 days to come, price is likely going to break and reach here. Here it will be just a waiting game. You just have to wait and see what would then happen if price reaches that particular level. So that's one thing that you can just do. Just wait. If there's going to be a reversal, you check the candlestick pattern that is going to take place here. If there's going to be a breakout, you also check here what is going to take place. So here, yes, we can look for buying opportunities up until price reaches this particular level. Let's quickly go to jump 50. What I can see in jump 50 is that price was able to break from this level, came to make a retest here, and then price started to drop here. So what did I see today? Okay, on H4, but if you come on the daily here, what I saw in the morning was that price, it was around this area. We're going to get a selling opportunity. I don't know why I missed that opportunity. What I wanted to see was that price was supposed to cover this gap here. An immediate rebalancing was supposed to occur at this particular level here. And this is what has happened. And price is likely going to continue moving downwards until price reaches somewhere around this area. Yeah, but if you're going to measure, one from here, if you measure this this flag, is it a flag? Okay, if you measure this leg here, and we also measure from here to here, so this is going to be our breakout. Price is likely going to reach here first, somewhere around this area. So it's likely going to cover this fair value gap. Okay, something like this. So I'm anticipating that price from this breakout is supposed to reach here. But we should not rule out the possibility of price dropping further than this. We should not rule out that possibility. Why? So for now, to be safe, these are going to be our target. We miss that this point, we miss this setup. So what we're going to be anticipating is that we are going to be selling here. This bearish momentum is likely going to continue. So let me continue. Okay, so for this particular week, if you analyzed what happened here is this. Let's just look at these two candles. We can see one, obviously because of the breakout, price is likely going to move down and it hasn't reached our TP. And if you look at these two candles, we can see that here, this is like an engulfing candle. This is like an engulfing candle. Price was able to close below this particular level. So this tells us something. It is telling us that there's continuation of the bearish momentum. Price is likely going to move further downwards. And then apart from that, so we can see this. Why? Because if you look at the open of this candle, price was able to close below the open here, indicating that there was bearishness. And if you look at this one, price is already taken the low of this particular level here, and there's likelihood that price is likely going to continue moving downwards. So here in volatility, you should be looking for selling opportunity. I saw this, I wanted to sell at this particular level. I don't know, I got distracted and I missed that entry. Then so what we can do is this. We missed an entry there. Here we're going to get a very good entry from this pullback. It was around I saw it sometime. That's why I put that line. So what we can do is this, and we can also see something here. We can also see a series of lower low, lower high. And what we can also see from this particular level is this. We can see that there's been a break of structure here. There's a break of structure here. And now price was able to take external range of liquidity. And there's a likelihood that price will move back here and grab internal range liquidity. Okay, but how are we going to get an entry? Where are we going to get an entry? Where exactly are we going to get an entry? Okay, let me just do this. Around this rejection block here. Okay, I normally want to use the 61 and the 50. Around this area, if price is able to move and come to this level, 61 here, look for selling opportunities at that particular level. So your focus will be on this rejection block here, which is around the area here. So something like this. So we want price to come to this particular level. Okay. So if this happens, and then we want price to start, we'll be looking for selling opportunity, and then we can sell from this particular level here. So this will be the ideal setup. We'll be focusing on that rejection. Let me go to the 15. On the 15 again, we have a good rejection. So we'll be focusing on that rejection 15-minute block here, this one. So we'll make use of this rejection block, and then we can look for selling opportunities there. It is also in line with the 61 and 50, the golden Fibonacci golden zone. So we can also make use of that. So this one will be easy to trade. Jump 50, we can wait for a pullback. Price comes to this golden zone and also have a rejection block at this particular level. Look for signs of rejection. Don't just sell. Look for signs of rejection, and then you can sell at this particular level. This will be very, very good to trade. So let's look at this one. This one is going crazy. So we also have our Optimus EA, the Optimus EA that can be used to trade booming crash, boom 1000, not booming crash, boom 1000. Okay, so if you're interested, you can with me and get a copy of that EA. And tomorrow I'm gonna go live again and show you guys the two EAs that I've created in 2024. So in 2024 we have created the Optimus, and we also have created what we call the Boom and Crash Dynamo. It's a very good EA. I will launch it tomorrow. Okay, so what we can also see in Volatility 50 is this. We have price moving in this pattern. So it's just like, let's just call it a triangle. So price was able to break from this triangle, and what we can see now is that price is coming back for a retest, and there's a likelihood that price is gonna move upwards. So here we should be looking for buying opportunities in Volatility 50. So if you go to the weekly, here we can see that price took out the low of this weekly, and price is likely going to move. So basically this is what I'm seeing. Price is likely going to move upwards. Price is likely going to move upwards. Okay, so this is what I'm anticipating. Here we are going to have a series of bullish candles here, but if I go to the 1 hour, we need something here. We can see we have a series of lower low, lower high, lower low. So we want price to first of all take out this high, this old high. We need a candle to close above that level. If a candle closes above that level, we're now ready for the bullish momentum. So we just wait for price to break out here. When that happens, what do we then wait for? We wait for price. Okay, so if I'm going to Fibonacci, okay, we can't use the Fibonacci. So let's just wait for price to break above this level, close above this level. Then we wait for for price to make a pullback. When price makes a pullback, we can then sell. But if you want to be more aggressive, you can sell at the breakout here. Sometimes it's not always that price will always come back for a retest. It's not always. Sometimes price will just close above here and then it will start moving upwards. But let's look for more ways that we can trade this. Let's go to the 30-minute time frame, 15. So here we're also waiting for price to take out this, and then probably we can't get it. So it's just a waiting game. If price is gonna start moving upwards, we need confirmation. The confirmation will only come when price closes above here. This will indicate that price is now ready to move upwards. So it's just a waiting game again here. Although we can see price has made a retest and it's likely going to move upwards. So this is what I'm seeing in volatility 50. Let me read the comments. He said English is difficult. Your English is very difficult. Yeah. If it was my native, my vernacular, I was going to be say please. I tried creating a free VPS, but they told me that the email is not valid. I don't know what would be you need to change the email. If it's not valid, the email is not valid. Maybe probably there's a problem with your email. You need to use a different email. Create a new email. Make sure that you verify everything and the email is valid, and then you can blessed day family. Okay. What can I do? Say I want to talk with you. I've given you my number. Please get in touch as soon as I'm done. Yes, the game is all about being patient, guys. Okay, so we need to wait for setups and then we can execute our trades. So basically we're just waiting for this price to break out here. That's why I like using pending orders, because you'll be waiting for setups. And we also have our spike detector here, DC spike detector. If you're also interested in this spike detector, you can also get in touch with me. So one of these, for example, crash 300 spike detector. This spike detector. Okay, so here, this is the see this setup. You can't expect to catch any spikes here. For those who have purchased the spike, I'm just explaining something here. It's sideways. There's no clear direction from the daily up to the 1 minute time frame. So you can't come here and you want to catch spikes. Yes, you'll be able to catch some spikes, but the setup is not complete. That's why you end up having something like this, like this, like this, like this. Yes, the spike can come here. Yes, I know, but this is not a proper setup. Why? Because I'm focusing on this KTQQE, this one. If it's like this sideways, the price doesn't have a particular clear direction. So you can't start selling here. You need to wait for proper setup. Although here I know because of the exponential moving average and these arrows, a spike can okay at this particular level. But you need to always constantly check the trend here. You need at least, for you to sell in crash, you need at least setup here. Bearish on the 1 minute to 5 minutes, and also a bullish on the higher time frame, maybe daily or the 4 hour. If you can have a bearish setup on the lower and the higher time frame, you'll be in a position to catch more spikes. Let's go to the 75. So this is a setup, a trade that I took. I'm actually in that trade waiting for the price to hit our target. I think we gave this somewhere here. So there was this order block here, our stop loss was here, and then we're anticipating the price should reach this particular level. Okay, so this is in volatility. I gave this signal for free in our free community. So for you to join, just make sure you go and like and subscribe to like, comment on 3 of our recent videos, and then you'll be automatically added in these groups. Okay, so let me just check here on the 15 minutes time frame. Price is likely going to reach this level. Let's just check here. We can see a big form of rejection here on this shooting shooting star here, this bearish pin bar, one. And secondly, we can also see all the candles. They have wicks on top, indicating that there's rejection on this particular level. So we are good. Yes, we are still good. Price is likely going to continue moving downwards and hit our level, but we can see that there's a great possibility that price will even move further down from this particular level. So this is volatility 75, and yeah, so there's still room for price to continue moving downwards. If you remember what I said about the volatility 75, we are anticipating that it should move even further. It's almost 2 months now. I gave this analysis. Let me just go here. Let me look for a tab where we can volatility 75. Okay, if you move to the weekly, okay, so I'm anticipating that volatility should continue moving down until it reaches this year. Why? Because we have a liquidity void here. We have a liquidity void. We only have bullish candles. Sorry, we only have green candles here. A series of green candles. This is liquidity void. So price is likely going to move down further from this particular level here. So even if we check the weekly candles, it is also the daily candles. We can also see from the daily candles that the previous 2 days price has been just moving down, and we can see it took out the low of this one. When it opened, it also took out the low of the previous. So there's continuation of the bearish momentum. So we are anticipating that price will still continue to move downwards. So here probably price will move down until it reaches on this particular level here, and it will even move further down. So there's room for this trade to continue moving downwards. Okay, let's go to the next one. Okay, let's try to look for boom and crash. Boom and crash. We gave a very good signal in, where's the signal? In crash, about crash. This is the reason why I'm doing this. We're talking about crash. Where is that setup of crash? Where is it? So this was the signal that I gave on crash. We saw that there was a bullish peanut. So price, it moved well. This is the signal. So if you move now to the, so we are anticipating that there's going to be continuation of this bullish momentum in crash 1000. So if you're going to be looking for spikes, you're going to be disappointed. Why? Because price is going to be moving up. It's going to be moving up. So let's just quickly go to crash 1000. Okay. So today we took another trade here. We're anticipating that price will continue to move up. So coming to the weekly, later. Here we can see we had a bullish, we can't call this one a bullish, but we had a candle that had a wick, and then we had this bullish candle here. So this is what happened last week. Price has just been moving up, and if you check here, price on the monthly, we have a bullish candle. Price is just moving upwards. So in crash 1000, don't look for selling opportunities, look for long buying opportunities. Okay, so what I can also see is this on the weekly candle. We can see we have a very big weekly candle here, a very big weekly candle. And what can we also see here? Yeah. So price has been just moving up. If I draw my trend line here, what do I see here? Okay, we have a breakout on this particular trend line here. So yesterday's candle closed above this trend line, indicating that price is likely going to move upwards. So let's see. But I'm anticipating the price should continue to move upwards. This is what I'm anticipating. And let's see. Yeah, basically this is what I can see. So we had a breakout on the 4-hour time frame. We had a breakout on the 4-hour. Okay. So we took our trade from this setup here. We had a setup like this. This is where we took the buy from here. And we also have this something like this. I know that in MT5 it's very difficult to draw. So price broke from this. So we are anticipating a continuation of this. So the target, our first target has been hit, and now we are just anticipating. So there's a likelihood that price will likely reach this part. Because if I'm going to measure from here to here, the leg of this particular structure, we put it here. We can see we still have room for more buying opportunities. So price is likely going to buy until it reaches that particular level here, where we have a resistance. So this is what I'm seeing in crash 1000, and we can see I also saw something here. What was it? But basically we can see all this candle, we can see these pin bars. They're indicating that price is likely going to move upwards. So this will be a perfect time for you to look for a buying opportunity. So how did I buy on this one? Can't remember. But I gave an analysis in these groups. I gave an analysis. No. Yeah. I gave an analysis. Something like this. So this is the setup that we were using, and we are anticipating that price will continue to move. So this is a signal that I shared here. So currently our target is for price to hit this level, but we know price is likely going to even move further. Okay, so this is in crash 1000. Let's look at boom 1000. Boom 1000. So you can also use this spike detector on 5 minutes time frame. I think that's where it is more powerful, more accurate. You can see you're going to get this big buying opportunity here. So boom has been bearish for some time. Okay, let's just go to the weekly. Let's see, let me zoom in. If you check the past 3 weeks, boom has been just dropping downwards, but now today, this particular week, price has been just moving up. So what I'm anticipating is this: price is likely going to make a retest on this order block, weekly, daily order block. Here we have a daily order block here. So price is likely going to move up, reach this daily order block here, and then start to move down. So if this is wrong, if you see a candle closing above this level, I'm going to give you the price. Nothing in trading is 100%. This is the reason why people lose, and you lose confidently. If you see a strategy, I was going through some stuff that I was reading. There was one of the best traders in history. He had a winning rate of 5%. You know what that means? It means that out of 100 trades, he only won 5. He was a millionaire. He was a full-time trader. I can't remember the name. He won 5% of his trades, 5 wins out of 95 losses. How was he able to make money? He made millions. We're not talking about hundreds or what. He made millions. So The reason why people make you are always losing it is because when they lose, one, they hold on to their losses. Two, when they are winning, they cut their losses. If you have that mentality of when you're winning, you quickly take out your profit. Know that one day, one day, you're gonna stop trading. Why? Because of the amount of losses that you'll be incurring. So the best setup, this is the mentality or the mind of a losing trader. We know that 90% of the traders are losers and only 10% are winners. So that means these guys are doing something different from these 90% of these traders that are trading. I'm not teaching about trading psychology. So these 10%, so you need to think differently. You need to think differently. So one of the things that makes people lose constantly, it is because of the fact that one, people hold on to losses for a very long time. So if you're losing 95 times and you don't end up blowing your account, that means you have a good risk management setup. I always laugh if I give a signal in my free groups and it goes wrong. Some people would actually send you a message. There was this guy, an African guy, was sending some some very nasty messages insulting me. Then I was just laughing. How can you be frustrated because of a one losing trade? How is that possible? To my surprise, because I gave a lot of signals, some of them were winners. That's why I stopped giving free signals. Why? Because if one trade doesn't go in the right direction, people will contact you. Why is it we are losing? Why is it you gave us this? It's like it's now your fault. Then I said, you know what? These services of giving people for free, they don't see the value in this. So I stopped. So what I'm trying to say is this: there's no reason. So you must. The reason why people are always losing, it is because of this. They are 100% confident. So what someone is going to do is going to risk maybe 10% of his account at this particular trade, and if it moves a little bit up here, your whole account is blown. So when trading, make sure that you have a proper risk management. At least 2% of your risk of your trading account, 2%. So that means if you have 100, if you have 1,000, you are only risking what? $20. Is it not 100,000? 1,000. Okay, let me just take you to my calculator. This is the beauty of using this calculator. Okay. So I designed over the weekend. I designed this. This one is my own calculator. It is all the indices that we need for booming crash. I created this. So assuming that you have 1,000, let's just say 10,000 US dollars, you're risking 2%. We said the 2% is the standard, but you can go as low as 1% or even 3%. So let's just take 2%, and your stop loss probably is 100 pips. 100 pips. So we'll be trading boom 1,000. So it would automatically tell you the lot size that you're gonna be making use of. You see how easy. There's no way you can blow your account when you're using this tool. So we also teach you the manual way of doing this, and so basically you now know how to use this. So I'll be sharing with people how you can effectively manage your risk using this tool that I recently created. And I'll teach you about risk management. I'll also give you this free tool. It will be free, a free tool that you will make use of. So there's no way that you can blow your account when you're using this risk management tool that I've recently created. Okay, so what we can see here is that I want price to reach this. We can see price is already there's a likelihood that price will close above this level here, and at this particular level here we want to look for selling opportunities when price reaches this particular level here. If you are able to catch this movement, you will be able to make a lot of money. But if a candle closes above this level, immediately exit, because price will likely going to move upwards. But what is the likelihood of that happening? I see that one is less likely. Why? It's less likely. Yeah, it's less likely going to happen. Okay, what do I see here? If I look here, price is already taken out this level. We can see price is now making a series of, this one was a higher low, and from this higher low, price has made a what? A lower low. You see? higher low and a lower low here. So if this happens, what we see, this is the birth of a what? Of a downtrend. Price, there's now a shift in market, a shift in market structure. We're now having a higher low, and a lower low. So price is likely going to move up and create a new lower high. So this is what I'm anticipating at this particular level here. If price comes here, there's a likelihood that price will then start to drop. Hey, my daughter is now making noise. Sorry guys. So from this level, price will then move, and we're anticipating that it will break below this particular level, probably come to this level here where we have a bullish order block here, something like this. So in boom, this is what I'm anticipating. Price should drop from this particular level here, from this level, and then it will then move downwards. So this is what I'm seeing in boom 1000. I think I'm now tired, and we have a lesson at 7 in my mentorship class, so I need to prepare for that. Okay, so this is all that I had for you guys. I was always counting my losses against my win. You can be a profitable trader with a 5% win rate. You can be a profitable trader with a 30% win rate. I'm always laughing. This used to affect me when I was creating my EAs. You have an EA with a 40% win rate, but it will be profitable. Then I would think no one would want to buy something with a win rate of 40%. Then I'll just stop. But now I've realized that what will make you a profitable trader is this. What will make you a profitable trader is this. If you are in a position to add on to your wins, if you are winning, don't cut your wins. This is the mentality or the mindset of a profitable trader. I think, let me just go through a little bit, some highlights of what we're going to be talking about. Okay. Okay. Things you should do to become a profitable trader. So, one, being a profitable trader has nothing to do with the fundamental or technical analysis. It is not related to that. Why? Because if you're going to be flipping your coins and taking trades by just flipping your coins, if it's head, you buy. If it's tails, you sell. Do you know that you can make money with a proper risk management, where you have a 50% chance of win, lose because they are not good at, it's not that they're not good at what? Chart analysis. No, it's not like that. Chart analysis is one of the easiest things that you can learn and you can understand. If people who are smart, doctors, professors, if you bring them to trading, why is it they lose? Someone who's very smart. If it's about chart analysis, you can be taught and you can easily understand how that works out. But why is it most people lose? It is because it's not because of they fail to analyze the chart. It's not because you guys, you can't analyze the chart like what I'm doing. You can do that. But why is it you're losing? You're losing, one, because you don't have the correct mindset of a winning trader, of a profitable trader. So in this particular trading psychology, we'll be basically talking about how you can develop or cultivate the correct mindset to be a profitable trader. So basically, that's what we'll be talking. Then in risk management, we'll be teaching you guys how you can safeguard your capital. How can you preserve your trading account? You should not, whenever you're trading, you should be trading a fraction of your capital, not the whole account. This is why people are always losing. Why? Because when they are trading, they risk the whole account. So we'll teach you how you can prolong your existence in the trading market. How are you going to survive? Because you can have a series of 5 losing trades. Okay, assuming that, let's just be more practical. Let's just become more practical. Assuming that we have 10 out of 10 trades, we take 10 trades, and we have a 50% win rate. a strategy that is a 50% win rate. What does it mean? It means that you're going to have 5 losses and 5 what? I hope you can see this. Let me try to make it big. Okay, you'll be taking 10 trades and you have a 50% win rate. So you have a win rate of what? 50%. Means with a 50% win rate, you have what? 5 losses. 5 losses and 5 wins. So you can begin with 5 losses before you start enjoying the 5 wins. So if you're going to be with assuming that we also have a risk to reward ratio, risk to reward ratio is 1:2. 1:2. So that means you're risking at least $1 to get $2 every time you are taking a trade. So this is the scenario. I want to tell you the importance of risk management. I want to show you guys the importance of risk management. So basically we have 2 people who management. John risks, you'll be risking 2%. 2%. It's 2%, not percent. 2% of his account. Then we have this guy who's more aggressive. He's very aggressive. He risks about 25, let's just say 20%. Every time when he's trading, he's risking 20%. What is the name of this person? Peter. Peter will be risking 20%. He's very aggressive. So this is the scenario. And these guys, they have how much? Let's assume that they all have account sizes. The account sizes of these people, they have $1,000 US. I want you to see both people have the same strategy with the same win rate. They are given the same amount of money. And we are going to, and they have a win rate of 50%, and they're going to take 10 trades. I want you to see what will be happening in these accounts. So with Peter, let's start with this guy. Out of before if he's going to take 20% of 100, it will be what? 20% 0 of 1,000. So let's start with Peter. So 20% on each and every trade is gonna be 1,000. 20% of 1,000, 0, 2 zeros, then 10 over. What's 20%? 10% is 100. Then 20% is 200. Yeah. 20%. You don't know Mensmus. I'm saying 20%. 50% will be what? 500.
50% of what?
1,000. So so it will be 200. 10% is 100. So 20% will be 200. So this guy is risking $200. I'm gonna listen. He's risking $200 on each and every trade. After 5 trades, that means we're gonna multiply by 5. This person will lose. So we'll be starting with 5 losses. So after 5 trades, he's gonna lose the whole account. The account is blown because he's too aggressive. Before he can start the wins, we have a consequence. We have 5 losses. So the trading will be like this. It will be 5 losing trades. We have losses, loss, and we have a loss. We have a loss. Then 5. Then we start to have a win here. Then we have a win. We have a win. We have a win. We have a win. That's 50%. So probably you can start with 5 losses and 5 wins. So this guy, before he can start enjoying the his account is gone, is blown. But let's look at this guy. He's risking only 2%. That means 2 times 1,000. 2 times 1,000 US dollars. I want you to see the importance of what risk management. 2% of 1,000 US dollars. $20 times 5. He's only going to lose 100 US dollars. He's only going to lose 100 US dollars. So after 5 trades, This guy is this one will lose 100. That means he's now left with 900. So what is left? This one is now left with 900 US dollars. And this one is left with zero. Is left with $0. You see? And this one is because of the fact that he has prolonged his existence in the trading market. Opportunities to trade, because if he's losing on each and every trade $20, 20 times 50, it will give you 1,000. So that means he has 50 opportunities to trade. But with this one, he only has 5. After 5 trades, you will be gone. He's no longer there in the market. He's quit. He's managed to quit trading because he's making a lot of losses. This one, when he's winning, he's gonna win what? We said he's risking 1:2, so that means his wins will be 4%. 4%. So 4 times, let me just do these calculations. So when he starts to enjoy the wins, this one is winning 4%. So if he's risking $20, that means if we are having a risk to reward ratio of 1:2, that means his reward will be 2 times the loss or the risk, which is 40. So it's 20 times $20 times 2 will get us 40. So on each winning trade is going to get 40 $40 times 5 times. So out of the 10 trades, this guy will end up having what? 40 times 5. You will get, his account will be up by 200 US dollars. So at the end of these 10 trades, do you see the importance of risk trade? This one, Peter, is left with nothing. In this one, they are using the same strategy. He is up by 200 US dollars. This one, his account is blown. So this is the reason, this is the secret, guys, that most YouTubers are not telling you. If you don't have a proper risk management, you'll never be a winner. If you don't have the correct mindset, table trader, you're always cutting your losses. When you're in a losing what? Trade. This is how a profitable trader should think. If you're in a losing trade, quickly move out of that trade. Minimize your losses and maximize your profits. Then if you're winning, a profitable trader, those 10%, what do they do? Guys, I'm telling you, it's very painful. Had their losses even before the price hits the TP. They would have closed their trades. That's the mentality of a losing trader. So as a winning trader, you need to constantly add on your wins. So basically, I'll be teaching more about these things in my risk management and psychology mentorship, which is going to be taking place on Saturday at 7, about these things. Trading psychology, risk management. I'll be having a mentorship class on that particular level. So guys, I think I should call it a day. Like what I said, VIX, I'm not afraid it will still continue going down. Let's just quickly look at the things. Correct mindset. Yes, correct mindset. You need to develop the correct mindset of a profitable trader. So you must always ask yourself, what are most traders doing? Risk management. 1, 2, if you're losing a trade, exit quickly. Have a good mindset. Yes, that's trading psychology. Yes, at least today you've managed to learn something new, guys. So if you have those 3 things, you'll be fine. Don't always think about, this strategy is making me to lose. There's no strategy that is 100%. There will never be a strategy that is 100%. You can be a winning trader with 5%. Out of 100 trades, you only win 5 and you'll be profitable. And I've shown you guys how with a 50% win rate. And those guys that are telling you that there's a strategy that is 99.99, they are lying to you. That's why you lose confidently. You risk the account each and every time because that strategy was, the person was saying that it's 90%. It is a 90% win rate. There's nothing like that. Okay, guys, I think I should call it a day. At 7 o'clock, we have lessons with my mentorship classes. So it's bye-bye for now. Thank you so much for your time. Thank you so much, guys. So let me just select one person. I'm gonna give you a spike detector for Boom 1000. One person who was participating. Fikayo. You can see Fikayo. Fikayo. Fikayo has been very active. Thank you so much, Mr. Fikayo Afoyabi. Guys, thank you so much for your time. I want to give Mr. Fikayo his... Guys, thank you so much for your time. I want to give Mr. Fikayo his spike detector, then we call it a day. I'm waiting for Mr. Fikayo. Network has kicked me out. Okay, but I've given you my number. Yes, Fikayo, please get in touch with me so that I can give you a spike detector. Guys, thank you so much for your time. Enjoy your day. Tomorrow, yes, we'll be talking about something else. We have our new EAs that we're going to be launching.